What's up, everyone? Sarah here, and welcome back to Tech Monetize Official. Today, we're zeroing in on a favorite topic, finding investments that not only pay dividends, but are primed to increase those payouts. We're talking about REITs, real estate investment trusts, with a track record of dividend hikes. I've narrowed it down to 3 REITs with strong fundamentals and clear catalysts for a dividend boost. We'll break down each one so you can see why they're on my radar. Let's dive into the first REIT that could soon be raising your passive income. First up is Realty Income, ticker O, famously known as the Monthly Dividend Company. This isn't just a catchy nickname. It's a reputation built on decades of consistency and trust. Realty Income has become synonymous with monthly payouts, making it a favorite among income-focused investors who value predictability and stability in their portfolios. This REIT has paid over 640 consecutive monthly dividends and increased its payout 124 times since 1994. That's a track record few companies can match, and it's a testament to their disciplined approach and commitment to shareholders. For investors, this means a steady stream of income that you can almost set your watch by. That's more than 53 years of uninterrupted payments. Dividends are in their DNA. Through recessions, market crashes, and economic booms, Realty Income has kept its promise, making it a pillar of reliability in the real estate sector. But it's not just history. Their latest reports show steady growth in adjusted funds from operations, or AFO, the cash flow that supports dividends. This metric is crucial for REITs, and Realty Income's consistent AFO growth signals a healthy, expanding business that can keep rewarding shareholders. Their portfolio? Thousands of single-tenant properties leased to recession-resistant giants like Walgreens, 7-Eleven, and FedEx. These are household names with strong balance sheets, providing a stable tenant base that can weather economic storms. Occupancy rates hover near 99%, meaning nearly every property is generating income. High occupancy is a sign of strong demand for their properties and effective management, which translates to reliable cash flow for investors. Realty Income actively manages its portfolio, recently acquiring Spirit Realty Capital in a multi-billion-dollar deal that's immediately boosting AFO per share. This acquisition not only expands their footprint, but also brings in new, high-quality tenants and properties, further diversifying their income streams. Most leases are triple net, so tenants cover taxes, insurance, and maintenance, protecting Realty Income's margins. This structure reduces risk and makes their income stream even more predictable, which is a huge advantage in the world of real estate investing. Many leases also have built-in rent escalators, ensuring organic revenue growth. As rents rise over time, so does Realty Income's cash flow, helping to offset inflation and support future dividend increases. Their investment-grade balance sheet gives them access to cheap capital, even in tough markets. This financial strength allows them to pursue new opportunities and weather economic downturns without putting the dividend at risk. The payout ratio sits comfortably in the mid-70% range, leaving room for future increases. This conservative approach means they're not overextending themselves, and there's a cushion for growth or unexpected challenges. Management is vocal about their commitment to growing the dividend, and their scale, over 15,000 properties, means huge diversification. This reduces risk for investors, as no single tenant or property can make or break the company. Even as the stock price faces pressure from interest rate fears, the fundamentals are rock solid. For long-term investors, these short-term fluctuations can actually present attractive buying opportunities. Realty Income's pattern of small, frequent dividend bumps is likely to continue, especially after the Spirit acquisition. This steady growth, even if incremental, compounds over time and can make a big difference for patient investors. For income investors, this is a rare combination: reliability, growth, and opportunity. Realty Income offers a unique blend of safety and upside, making it a core holding for those seeking dependable passive income. The next dividend hike? It's not a question of if, but when. With their proven track record and growth strategy, investors can look forward to more increases in the future. Realty Income remains a cornerstone for anyone seeking rising passive income. Its combination of monthly payouts, strong management, and a diversified portfolio make it a standout in the REIT universe. Let's move to our next REIT powerhouse. Transition. Next up is Prologis, ticker PLD, the world's largest industrial REIT and a true giant in the logistics real estate sector. Prologis is the backbone of e-commerce logistics, quietly powering the global movement of goods that arrive at your doorstep. They own and develop massive, state-of-the-art warehouses for industry titans like Amazon, FedEx, and DHL, with properties strategically located near major ports, highways, and urban centers to ensure fast delivery and efficient supply chains. The explosive growth of e-commerce is fueling relentless demand for logistics space, and Prologis is perfectly positioned to capture this surge with a portfolio that's nearly impossible to replicate. Here's the kicker. Many of their leases were signed years ago at much lower rates, locking in tenants at prices well below today's market. As these leases expire, Prologis can re-lease the same space at today's much higher market rents, sometimes 50% higher, or even more in the hottest markets. This rent mark-to-market effect acts as a built-in growth engine, steadily boosting revenues and profits for years to come, regardless of broader economic cycles. Their core FFO per share, a key measure of REIT profitability, is growing at a double-digit pace, which in turn powers consistent, reliable dividend increases for shareholders. Management remains bullish, pointing to record low vacancy rates, strong tenant demand, and impressive pricing power that allows them to push rents even higher. Prologis is also a prolific developer, building new, high-tech facilities at attractive yields and often pre-leasing much of their development pipeline before construction even finishes. Their A-rated balance sheet gives them access to low-cost debt and tremendous financial flexibility, even in today's higher interest rate environment, which is a huge advantage over smaller competitors. The payout ratio is conservative, often in the 60–70% range, so the dividend is not only safe, but has plenty of room to grow as earnings rise. Their global reach, with properties spanning the US, Europe, and Asia, insulates them from regional slowdowns and allows them to benefit from global trade and supply chain shifts. Barriers to entry are sky-high. You simply can't replicate their scale, prime locations, or deep relationships with the world's largest logistics and retail companies. Short lease durations let them quickly reset rents higher, making Prologis a powerful inflation hedge and a rare REIT that actually benefits from rising prices. They typically announce dividend hikes in Q1, and with their robust growth, another increase is likely just around the corner, rewarding long-term investors. For investors, Prologis offers a rare combination of growth and rising income, driven by unstoppable trends in e-commerce, supply chain modernization, and global trade. This is a REIT with a powerful income story that's only getting stronger, making it a compelling choice for those seeking both stability and upside. Now let's look at the digital side of real estate, where technology and property intersect to create new opportunities. Transition. Our third pick is Digital Realty Trust, ticker DLR, often called the landlord for the internet, and for good reason. In today's hyper-connected world, nearly every digital interaction, from streaming your favorite show to running complex AI models, relies on the infrastructure that companies like Digital Realty provide. They own and operate a vast network of data centers that power everything from cloud computing to artificial intelligence, supporting the backbone of the digital economy. These facilities are the nerve centers for the world's most important tech companies, financial institutions, and even governments. The ongoing digital transformation is driving exponential demand for secure, reliable data storage and processing. DLR sits right at the heart of this megatrend, enabling the flow of information that modern society depends on. The AI boom is only accelerating this trend as cloud providers and enterprises race to secure high-density data center space for their next-generation workloads. The need for more computing power and storage is pushing demand to new heights. Recent earnings reports highlight record leasing activity and rising funds from operations per share, a key metric for REIT investors. This strong performance signals robust demand and effective management execution. DLR has increased its dividend every single year since its 2004 IPO, nearly 20 consecutive years of rewarding shareholders. This consistency is rare and speaks to the company's financial strength and commitment to returning value. Their global platform digital network spans 6 continents, creating a sticky ecosystem for customers like Meta, Google, and Microsoft. Once a company is plugged into this network, switching providers becomes a major undertaking. Interconnection revenue, linking customers within their centers, is a high-margin, fast-growing part of their business. These connections allow clients to exchange data quickly and securely, making DLR's facilities even more valuable. DLR is constantly building new data centers, often pre-leased before completion, which reduces risk and ensures a steady pipeline of future growth. Their ability to anticipate and meet customer needs is a key competitive advantage. Management is laser-focused on capturing the AI opportunity, shifting development to support high-density workloads and next-gen technologies. This forward-thinking approach positions DLR to benefit from the next wave of digital innovation. Their payout ratio remains healthy, striking a smart balance between growing dividends and reinvesting in expansion. This discipline helps ensure both income and long-term capital appreciation for shareholders. The supply-demand balance has shifted in their favor, allowing DLR to command higher rents and deliver stronger returns. As digital infrastructure becomes more critical, pricing power is increasingly on their side. Strategic joint ventures let DLR fund growth without over-leveraging or diluting shareholders, enabling them to scale efficiently while maintaining a strong balance sheet. Their competitive moat, global scale, technical expertise, and deep customer relationships is tough to match. Few rivals can offer the same combination of reach, reliability, and innovation. With a 19-year streak of dividend hikes and surging demand for digital infrastructure, another increase is likely just around the corner, making DLR a compelling choice for income-focused investors. Digital Realty is a prime play on the digital and AI revolution, offering a rising income stream and exposure to one of the most powerful trends of our time. Let's wrap up with your next steps so you can take advantage of this digital transformation and position your portfolio for the future. There you have it. 3 powerhouse REITs, Realty Income, Prologis, and Digital Realty, each poised for a dividend hike. The key isn't just finding dividends, but finding growing dividends that compound your wealth over time. Always do your own research before investing, but these REITs offer a head start for building passive income. If you found this valuable, subscribe to Tech Monetize Official for more deep dives and actionable insights. Join our community of smart investors and stay ahead of the curve. Thanks for watching. See you in the next video.